video, everything, huh? Play handphone. Anyway, I was sending out the invite to the Telegram group. So yeah, welcome everyone. We're back today, this week on TFC Updates. I think there's a lot of stuff going on, right? A lot of things in the earning cycles and in tech and all the different spaces. And today we have a guest, right? So we have Nigel in the house from Invest with Nigel. Say hi, Nigel. Yo.
Yep. Hi everyone. Yeah, thanks for having me too.
You're very calm, leh. Make me look like Xiao Kia like that.
Alright,
Anyway,
I'll try
Nigel
to hype
has
you up a
a
little more.
yeah. Thank you. Anyway, Nigel has a pretty big channel on YouTube. You should go and check him out. He's also very pro China stocks, right? I think so far I look at your videos. I was like, all the arguments pretty pro China. Yeah, you want to give a quick thought as in why you are so positive about China?
I guess generally I'm just very bullish on China in terms of the economic growth of the country. And I think right now many people are talking about regulatory risk, things like that. But when you really look deeper into kind of the aim of the government in terms of their incentives, in terms of the regulation, things like that, I would say it's really nothing to be afraid of. I mean, in my opinion, at least, not financial advice, of course. Yeah. So it's pretty. Yeah, so my general views is that the government just wants to make it more of a fair competition for everyone. They're not going to hamper the companies from growth because after all, they need these companies. It's kind of like a symbiotic relationship. So quite positive on the Chinese companies and great opportunity, in my opinion.
Nice. Symbiotic 都出来了, but it's good. I agree. Right. Actually, I broadly agree. I laugh not because I don't agree with you. I laugh because everybody say no, this is not financial advice. Everything also use this kind of cover their cutting, right? Like this is not financial advice. But anyway, yeah, if you want to get more insights to how Nigel look at the markets and what are his thoughts about essentially the Chinese markets. I think recently he churned out a lot of Chinese related content. Please head over to Invest with Nigel on YouTube, right? But today we're going to focus on TFC updates, right? So we're going to go one round with all the different news. I think recently a lot of stuff. So I'm going to start first. So the first news that caught my eye this week is Square acquires Australian buy now, pay later startup Afterpay for 28 billion in full stock compensation. Okay, so it's a full stock acquisition, no cash out. This is important because the valuation of Square is very, very high. Okay, so Square plans to integrate Afterpay, which is the Australian buy now, pay later startup, into existing seller and cash app business unit, so that they can provide the buy now, pay later ecosystem, essentially, right? And they are not the only ones. There are a lot of other people in the game, and PayPal, Visa, they're all trying to acquire and all that jazz, right? So any thoughts, guys, about this whole latest acquisition spree of all these big payment ecosystems, and specifically for Square?
So when they bought Afterpay, they bought immediately or did they pay later?
Hey, I pass you the bottle so I can drink water. Then you give me this kind of answer.
Yeah. Okay. Seriously. Okay. So it's quite interesting. When they actually shell out that amount of actually just stock, 28 billion is pretty huge sum. I'm not sure whether there were actually competitors that were also bidding up the price. It's very, very good for Square, but not so good for, say, PayPal, Visa, MasterCard that's also trying to go into the space. Australia is an interesting place. I think Afterpay is one of the bigger market shares apps that's there so far. So by doing that, basically they can just secure the whole country. Yeah. So it's a pretty bold move, but probably a good one because it's just too competitive.
Yeah, but I think they are not the only guys. Okay, I'm very interested to try to understand like what is the level of the deal, because they are saying that they will integrate the solution, right? So they're going to
Yep.
integrate the solution into their ecosystem. And in my view, right, the solution integration process does not sound like a complicated tech integration. It sounds more complicated from a process integration standpoint. Okay, why? Because I think Square's process in terms of payment processes is not as developed as Visa, as PayPal. You know, they are very up on the tech chain. So when they want to acquire someone like this, I do think it's a lot for the licensing, for the clearance, for a lot of the more back end stuff rather than tech integration, because you know it's merely just a UI and you know a little bit of processing at the back. Am I wrong? I see your face is like 你不懂, right? So
There's some more involvement lah. I mean, behind the scenes, there's always this back end things. You need to plumb things here and there. But for buy now pay later, it's pretty straightforward. Basically, you combine like multiple payments into one. This is your whole lump sum already. It's gonna be different from say Visa or your Mastercard with the underlying infrastructure that's powering your credit and debit card payments. There's no fraud checks per se, right? So which is why buy now pay later is being looked at a lot of different governments across the world to be regulated. It's very, very easy for them to disperse these kinds of mechanisms, right? Because it's not a loan, but it has the same effect where people have just additional spare cash to go and spend, so to speak. But actually, they're spending the same amount of cash. It's just that it's in installments. Yeah. So I think it's still okay that they say that they want to integrate and all that. It's not such a big issue. There's some involved like engineering to actually integrate into this, but basically if they have your seller and cash app already up, what they want to do is basically just funnel all these basically payments into their own. Yeah, but it isn't as complicated as say compared to Visa or Mastercard. Yeah.
Yeah, I think a big part actually. I think many people are saying that are they paying too much for the Afterpay itself? Because I think it's quite a huge multiple of sales. Just for comparison, I think one thing is that they are probably also thinking of monetizing the existing Afterpay users. Because when you're buying that company, you're not just buying the company, right? You're buying like their users, you're buying the merchants that are already on Afterpay itself, and it's a very easy way for them to immediately get the geographic expansion into a new country. So that's one thing. I think it actually reminded me a bit of when Facebook acquired Instagram. Many people are saying, "Hey, are you paying too much? The company's not even making much revenue." But what they miss out is that when they acquired Instagram, Instagram had a very large user base. So those are just assets waiting to be monetized. So I think it's kind of the same. I would say that kind of plays a part in this acquisition where the existing users could be further monetized, and once they are monetized, then the deal may not actually look that expensive.
Okay, I got 2 points to that, right? I think the first point is Facebook acquiring Instagram. At that point in time, Facebook already has quite an established advertiser base, right? So they already have an advertiser ecosystem, all the backend stuff that people that use Facebook may not know, right? And when they acquired Instagram, they had an easy kind of integrate over in terms of business expansion, right, into where it is. But I think for Square, PayPal, Visa, they're all in the market grabbing period, right, where they're trying to grow their solutions, they're trying to grow their broader ecosystem so that they can be the dominant player of the future, whether is it in payments and what have you. So specifically when you want to look at Square, right, I think you really got to look at, of course revenue went up quite a bit because over the years they have acquired a lot of stuff and they have integrated all sorts of solutions for their partners, right? But gross margin right, actually came down quite seriously, for the past 5 years, from 37% gross margin to about 23%. So in other words, they are spending to grow, or they are stretching themselves much bigger to grow compared to their competitors. PayPal is hovering at about 47% gross margin. Visa is going at about 80% up down year on year, right? So when you look at from the angle, then you really got a question like, is what is Square trying to do, right? Is it stretching themselves too much and all that jazz? And I would argue that actually Square is not paying a premium for Afterpay because it is giving a stock buyout, right? It is not
Right.
paying cash. So Square's valuation is extremely high, right? So I would argue that Square's valuation is even fatter than Afterpay. so by giving a kind of stock acquisition, right? Maybe they are getting a pretty good deal, right? And probably from Afterpay's perspective, it is a great integration because you join a bigger boy in the game, right? Where they have the merchant solutions, they have the cash app, which is competing with Venmo. Of course, Venmo is way above. Venmo is from PayPal, right?
Yeah.
But if you think about it, maybe they did get a good deal, in this space, and they essentially kind of acquired some sort of process partner that can further integrate. Yeah, so I think that's something interesting to know, lah. But what are your thoughts on Square actually as a company? I think it's an interesting company to look at.
I don't think it's a payments company, right? We shouldn't actually be comparing it directly with your Visa or PayPal. It's first and foremost, it's like a point of sale company, right? It's retail transactions mostly, and then they decide to venture into online as well. So direct comparison to that a bit, it's not really the same lah. And then as for the deal itself, I have some numbers. So for Afterpay, they have 96,000 merchants worldwide. Right, so when they acquire them one shot, right, it's not just the user base also, but it's a number of merchants, and specifically it's actually for the online beauty and wellness sites that's offering the buy now pay later already. So for Square, right, this integration is a lot more synergy, right? Because these also is like your like maybe mom and pop stores, your brick and mortar kind of shops, and the penetration is 43%, so it's pretty darn high.
Quite high,
So
yes.
it could be worth it lah. Yeah.
Fair.
US customers, there's 8.1 million. Globally, it's 17 million. So now immediately they can become Square Cash App customers or users also.
But I will argue because they are a growth stock, right? You already got to look at the total addressable market, right? So if you look at the total
Yeah.
addressable market, they have already gone past the POS structure kind of process already, right? They
Sure.
are now entering the fields of the big boys, right? So they're entering the payment processes, they're entering all these, essentially P2P and capital and pay Square Capital and what have you, right? So all these different that they're entering has big players, right? We cannot just look at them as a POS company that started long ago. I mean, if you think about it, there was a period of time they had three ecosystems: the delivery ecosystem, the merchant infrastructure ecosystem, and the cash app, consumer payment ecosystem. They spun off the delivery with DoorDash to go for listing, right? So if you look at it, they went through a lot of changes, and it's very iconic of Jack Dorsey, right? So Jack Dorsey is the founder, and I think when you're investing in Square as a company or some kind of companies like this, which are like high growth, you're really investing in the management. Jack Dorsey is not my favorite kind of manager. You really got to look at their number two, right? So we can talk about this another time because it's gonna take up a lot of space. But yeah, Square, interesting company, interesting moves. Yeah, let's see where this brings us. Okay, next.
Right. So I think it's my turn. I'd like to talk about Apple. So last week, I think you might have heard they are releasing some kind of privacy control. Basically, they're going to go through your iCloud photos to see whether there's any child abuse or child pornography going on. It's like, whoa, okay. So they have taken that kind of responsibility to the next level. But it's super invasive, right? So it's just another reason for, number one, the company to actually go through your photos, right, on that basis. But number two, also, it's kind of like a backdoor for governments to also pry and maybe just open the door a little bit bigger and say like, oh yeah, I want to check for like terrorist acts, I want to check for this and that also. And before you know it, it's a kind of a backdoor. So it's a little bit scary. But what do you guys think?
Nigel, go ahead. Any thoughts?
Yeah, I actually think, I was just having this one thought, right? Like, how many people actually do care about privacy? Because we always say that, we care about privacy, right? But a lot of times convenience, to me convenience outweighs privacy. When there's a convenience factor, sometimes we may say we care about privacy, but we don't really take much action. So I'm just curious, like, when they pull off such a move, it sounds crazy to me, but if you ask me, would I do anything about it, like retaliate a bit or anything? I'll probably just whine a bit, but I'm probably too lazy to do it. Because that was one of the things I was looking at when there was a lot of hoo-ha about Facebook privacy. Like many people say invade privacy stuff, but do people actually take really big action and really retaliate? I don't think so. So that was immediately the first thought that came to my mind when I heard of that news.
And that was a very good time to buy Facebook. At that point in time, during the whole privacy saga, it went out to 130, 170. I can't remember, but it has never been this low for many years. Okay, but if you look at Apple share price, it didn't really shake. Nothing really changed. I would personally think I agree with what Nigel say. People care about convenience, but at a certain level, when it proves that it can be very invasive, people fear. All right. So
Mm.
for Facebook, you clearly tell it's not invasive, right? You don't like, you delete the app, so be it. Right. But now you are like, it's like a backdoor, right? Essentially, there's some sort of a software backdoor into the device that you're holding on every day, that you are using everything on. Right. So maybe in the early days, it's a slippery slope discussion. Whether will it get there, nobody knows. Right. Whether will they start to collaborate with governments and all that to start to track people, nobody knows. But by then, if that happens, then you never know, right? There may be new softwares that come in to block them, or people will hop off to OnePlus. I don't know. Shout out to OnePlus, Singapore's number one smartphone brand. What have you, right? So I think on those grounds, it's a bit wonky now. Whether will it affect the business, but in the longer term, I honestly don't really like how it sounds. It's like it's a bit closer to policing already at this moment in time, right? And yeah, although they say they scan for child pornography, lah, but
So
that's
blocking is one thing, right? As a company, you say
mm,
like, okay, yeah, we're going to disable access to your iCloud because we've found something funny in your photos. But what if they go to the next level where they also report this to authorities? Then it's a very big hassle. Okay, why do I say this? So everything that runs on their checks, right, is just based off some AI model, okay, some fancy AI model. It can be tricked. So there's a few photos going around. It's a link to a Google Drive with a set of random photos, random colors, right, which can actually trigger this alert. This is a scary bit. So for someone, right, it's like without them knowing, they just take anyhow take photos, or I like this wallpaper, I take screenshot. It just looks something like that, right? Triggered alert already. Then pump, you're locked out of your iPhone. And then worst come to worst, authorities will come to your house. Hey, you're suspected, like, yeah, with all these photos, that kind of thing. This is
mm.
weird, yeah. Yeah.
Yeah. I mean, I get it, but at the core, we gotta ask ourselves: will that affect the business, right? At the core, we gotta ask ourselves: will
Buy
consume is
Android. Buy Android.
yeah. Right. So I think for now everybody is buying broad-based ETF lah. So all your FANG stocks, they're all in it, bao ka liao, right? If you pick your own stocks, of course, it's a bit different. But generally, I think at this moment in time, it will not affect the business at this moment in time. Okay, but we got to keep observing as investors. You want to know, like, are consumers retaliating? Are they retaliating in droves? But we cannot deny that the walled garden strategy is still very strong. For Apple at this moment in time, right? So yeah, I doubt that will happen in the short term. But as a concerned citizen, that I don't want to be excessively policed. I don't even like that the MRT has like 100 video cameras, pointing at every single corner. So it's like, why would I want anybody to
It's going to be
install?
double next year.
Yeah. But yes,
So-
anyway. So I think at some point it gets invasive, it creates unnecessary stress, and it reduces the trust level of society. So that's a whole tangent for another time. But for this case of Apple, yeah, I'm not very concerned yet. Yeah,
Yeah.
okay. Anything else to add, Nigel? If not, it's your turn.
Yeah, agree with what you said. Yeah, so my turn. So actually, this very interesting one came to me, which is Robinhood IPO. So I don't like the company, so I'm just gonna say it first. I don't like the company at all. But
There goes one sponsor, bro.
so if you look at the CNBC, right, Robinhood surges like 100% up in a week or something. Cathy Woods took a position as well. Yeah, but I'm just not a fan of the company. I think I remember there was I think it was Charlie Munger's and one of their annual meeting or what, where he really insulted Robinhood for something. I can't really remember, but along those lines. But I'm not a fan because of the business model lah. To me, brokerage platforms tend to be very price competitive. You don't really have an edge with others. I mean, Robinhood competes like Webull, Interactive Brokers, TD Ameritrade. They're offering the same thing to me. It's kind of like a commodity kind of product. So just a business wise, I'm not a fan. I saw on Reddit the other day that people were saying it's gonna be the new GameStop and AMC. So I thought it was funny to just bring it up as a point of discussion. Like, what do you guys think of the company? And yeah.
So a few things I want. Yeah, go ahead.
Yeah,
Go ahead,
Reggie,
Thomas.
go ahead.
Yeah, you can
Okay,
go.
so
I take a break.
you mentioned Thinkorswim, right? It's by TD Ameritrade. So I think their business model is almost the same as Robinhood. It's just that it's not as marketed as badly. So TD Ameritrade also, they have their own market maker behind the scenes, right? Selling the order flow from your retail traders to them. It's just that they don't tell this out loud, but what they tell very loudly is that, no commissions whatsoever, and that has worked well so far. Not sure why at some point Robinhood got very, very negative flag from the media, and then it's just been positioned that way. But yes, their business model definitely just thrives on order flow. I think that's the first thing. The second thing is about their stock price. I think the 1 or 2 days where they actually IPO, nothing moved actually. A lot of movement came only when Cathy Wood said that she had a position, or because she entered into position, that's why the price moves up so high. So I don't know. I think most of these movements is due to very large whales actions rather than a lot of people piling in. Yeah. So
I think this kind of price movements is a little bit of both, right? So there's a little bit of momentum inside. There's also a little bit of big whales revealing their position and other people finding comfort that, that these guys are owning something, it's not a career breaking decision anymore, right? Because reality is a lot of these big financial guys, they don't want to take on unpopular positions, or they don't want to take on positions that are too special. Although if they want to create alpha, they have to take on these kind of positions, right? But it will kill their career if it does not do well. Right, so they it's hard lah, right, to go to your investors. Oh, we're gonna open a position in our ETF to have 5% in Robinhood. But compared to after Cathy would come out and say, oh, we have a very big position. So, oh, Cathy, that friend next door, right? She bought some. Let's buy some too. Right, so and that's the reality in a lot of funds. A lot of people don't recognize this, that your fund managers, they're also humans. They also have a job. They also trying to survive and all that stuff, right? So I think that's something to note. So it's a little bit of big whales coming in, a little bit of momentum, a lot of retail guys pushing up, right? So it's not as simple as what people put it out to be. That's my base case, lah, right? But for Robinhood's business, I don't like it for sure. But I also think manga is a little bit outdated. Okay, so okay, I know I throw this thing out, right? It's like I gonna flag, like I get attacked by all these like value people, fundamentalists. Okay, why I think manga is a bit outdated. I don't think he's dumb. I think he's very smart. And I'm in no position to say that. But if you think of how fast growth is changing, you think of how fast a lot of these companies can spin off new revenue, stream in today's world. You really you really cannot underestimate the kind of exponentiality of these businesses, right? And I'm not saying that it's so easy to just start another vertical, or it's just so easy to do another thing, but hey, it's actually not that difficult to upsell something with push notification. It's not that difficult to funnel your audience to do something else. Push notification is one of the best innovation out there for anybody that's trying to market something. So do not underestimate the power of push notification. You just look at what Zuckerberg can do, right? He can just go on the Facebook app and say that, we're gonna do a talk, He can essentially change the whole world if he wanted to do those kind of things, which is why it's very scary for a lot of the governments, right? So from that angle, you cannot underestimate the kind of following that Robinhood has and the kind of revenue stream that it can spin off, right? P2P lending, whether is it higher risk investment tools, they just need new licenses, they can acquire other people. As the valuation get thicker, all kind of stock merger and all that, it's a lot of stuff can happen, and you cannot discount the management. You can question that these guys, whether they got ethics and what, but you cannot discount that they changed the whole sector. Right, this bunch of techies that were not from Wall Street and all, right, they essentially changed the whole sector. They killed all the commission trading in a matter of 8 years, right? So you cannot discount how rigorous they are and how innovative they are and how fast they move, right? And they have a cult following, right? So I think from there, as a business, that's something that maybe people will conveniently put in a discount factor. Okay, I sound like Katie Wood's neighbor now, but any thoughts? Any thoughts? Yeah, any thoughts?
Yeah,
I think the
one
trend
point you
has already
mentioned
been
was
there, lah. Yeah, Nigel, go ahead.
no, go ahead. There was a lag, I think, so I didn't hear you. Yeah, go ahead.
Okay, so basically, I think the trend of all these fees coming down already has been there for the longest time. Not just for retail, but for also institutional financial institutions. So it's just that it's been marketed that way. This is my theory, lah. It's one is the trend that's ready that the fees are just going down and down and down and down. Institutional hedge funds, retail investors, they're not willing to pay so much anymore just to get a trade done, right? But Robinhood is at the front and center because they are the main attraction. It's like the most attractive app to actually use. But so is Charles Schwab, right? So is like Interactive Brokers. It's also low but not free, but they have their advantages, things like that. So where the trend is actually going is that the fees are going to get lower, if not for zero. So they have to find somewhere else to make. But for Robinhood in this case, where I see that they want to grow from is to say become a super app. Like, this story has been told for the longest time, but still no super app lah. So they want to go into say like lending, or they want to become a deposit account. They want to become like a next kind of TransferWise. There's limits to that growth because everyone else is piling into that. Like we just talked about Square, right? There's also Stripe, PayPal, and all that trying to do the same thing. So I don't know. Growth prospects for the company, I think it's still rather limited. They can do as many things as they want, but realistically speaking, their base business model is you still need some kind of cash cow before you do these kind of things. If not,
Yes.
you have to spend as much as Square to just expand. Yeah.
Yes.
Nigel?
Yes.
Yeah, I was just gonna talk about the part that Reggie mentioned about creating new revenue streams. I think Manish Provai recently did some. He had this recent presentation on this thing he called spawners. Basically the Amazons, how they come up with
Spawners!
like AWS. Yeah,
Man,
that was the term he used. So that was the
It's okay. I was just
So
talking to my friends like there are certain terms for certain era, right? Like these
Oh.
days it's called vibing, right? It's like we can or called react, right? Today you better do react videos. In the past it's just called commentary, but now it's called react videos, right? So in the past we say we support people, now we say we stand with people, right? So anyway, spawning. Okay, continue.
yeah. I mean, this is not a Gen Z term. It's by Manish Provai, so it's one of those OGs.
It's a Dota term.
Yeah, so he kind of talk about this idea of looking for companies that has opportunities for spawners, for new businesses to generate new revenue stream that's totally beyond their existing business. Like for example, Amazon, AWS. If I'm not wrong, it's taking like more than 50% of the income right now. So and 20 years ago, the investment thesis would not be on AWS because AWS didn't exist. So definitely there's opportunity there for such companies where they are able to bring out new revenue streams. The thing that I would caution against is more of having this biasness of looking at these companies that have already made it. They've produced spawners that became cash cows, but there are also many companies that look like they were gonna produce spawners, has characteristics of those kind of companies, but didn't make it. And there's this biasness that I think some investors will look at. This company could be the next Amazon. This company could be the next whatever lah, for Google or whatever. But there are also many companies that were said to be the next ones, but didn't make it. So it's just a point that I wanted to talk. And also the part about Manish Provai, I thought that was a really interesting idea. It's also he also reinforced the idea of optionalities, which is something I look for more increasingly nowadays. Like for example, that's why I'm a very big fan of Facebook, because like you said, there's a lot of power when you have so much eyeballs, right? Half the world is on Facebook. You can literally spun out a new thing, payment, business solutions,
country,
and succeeding. Yeah. So so I think that's a good way. That's a good framework to look into, but also to avoid the biasness in that area lah.
Yep, definitely. I fully agree. But at the core, I think when you are buying a company in the IPO stage or in the early days, right, you should be cautious because you don't know what the investors want to do. Okay, if I am management at today's valuation, I will sell more shares. I will liquidate you. Okay. So because I need capital to fight, right? I need war chest to fight, and you're willing to come here at this premium, right?
go and raise from investors lah.
Yeah.
Go and
Okay,
whack
fair.
your shareholders. Walao.
Yeah, no. Your shareholders at this stage are also your investors, right? At a certain level, they have to handle, such thoughts, or they have to be able to accept and recognize that it is all part of investor management. I think I either take on that or I raise more, equity, right? And in today's valuation, I will raise more equity rather than debt. Or maybe I will do both. I take more debt first, then I raise more equity.
Or you could get more revenue, like sales.
Yeah. Oh
turning a
yes,
profit.
but we have come to terms to the idea that this business model is a little bit wonky already, right? So you need the war chest to do something else, right? And I think Robinhood may do that, right? So either way, I avoid IPOs. I do not buy any companies that are 1 year into IPOs. To me, they are still getting their foot together. I want to see what the management is doing and all that stuff, right? So it's all part of it. Okay, so that is Robinhood for all of you. Yeah, I hope you don't use Robinhood. But anyway, so so next company is a lot stronger. I think fundamentally they have a great business, they have a big cash cow, and that is Nvidia. Okay, UK considers blocking Nvidia's 40 billion takeover deal of ARM. Okay, so for all of you that don't know what is ARM is essentially the company that sets the blueprint for a lot of all the chips, a lot or all actually probably all right? So all the kind of computer chips out there, almost all of them, okay, I would say all of them uses some element of ARM's design, right? So they are the architecture design, they are the guys that design the chips, and then you have all these other people that produce. And Nvidia wanted to acquire ARM, right? Because I do think that there's a lot of advantage for anybody to own ARM, right? To be the dominant player, to then decide whether I own a license to my competitor, right? So I think there's a lot of monopoly risk and all the anti-competition risk. Right, so I recognize that, but when I saw Nvidia wanting to acquire ARM, I was like, yeah, this is a good move because GPU may be a little bit of a problem going forward, right, for as a business, because it's not as prominent in wearables, not as prominent in mobile, it's not as important GPU, which is their main business, Nvidia. Right. So any thoughts about this UK blocking Nvidia's 40 billion takeover?
Yeah, I think when we did the Nvidia stock geek out, this was really, really important for Nvidia because it's just strategic, right? There's
Yeah.
certain areas which Nvidia wasn't so strong at, but this will cement their position as a provider of GPUs as well as for CPUs. Nvidia is primarily producing GPUs meant for say games, Bitcoin mining, in this case like AI and all that for cloud compute, but they're not very good at doing CPUs, right? And in fact, they don't even do it because it's not their core competency. But moving forward, that will kind of mesh together, that whole technology roadmap. So GPUs and CPUs, they have to be really, really aligned. And you'll come to the point where now, say if you're on a Windows or you're on, mostly Windows, you're on some Intel kind of CPU, right? Yeah, moving forward, the performance for that won't be as good because, well, Apple did it better. So everyone's scrambling to try and figure out what the architecture is like. But basically, all of it is just ARM architecture under the hood, right? Even for Android, correct me if I'm wrong, all the tech geeks out there, but yeah, it's also using ARM, I think. Yes, it is using ARM. So yeah, once your devices they go from say bigger to smaller, smaller, so that's where ARM architecture comes into play. Yeah.
Yeah, I actually don't really have much views because I've not looked deeply into the company itself. But I'm just wondering, given such a big deal, right? Didn't the other big tech companies try to get a piece of the pie kind of thing? I would be surprised if they are not trying to do that, lah.
I do think there's a little bit of a bidding before that, but not now, right? So the Nvidia probably is really paying a super premium for a lot of these things already, right? And trying to enter the space.
Now
But
it's getting all the permissions.
yeah, it is a complicated deal. Okay, so uh, because they are essentially the grandfather of architecture in computer chips. Right, so I would think that it's not even easy to pull off from a legislation standpoint, and they were probably the closest one to getting to where they want to go. And by the way, I think just to clarify, ARM is owned by SoftBank, or was it owned by? It's owned by SoftBank, right? Right. So
SoftBank.
ARM is a UK company that SoftBank bought over already, right? Or at least a majority stake, lah. Right. So all that jazz is a bit complicated. At some point, deals is not about money anymore. Right. At some point, some of the higher order deals, there's a lot of geopolitical, there's a lot of synergy, there's a lot of will you create jobs in my country, all those things that people don't talk about. Those are the kind of big deals that happens in the market. Right. So broadly speaking, I would think it does not give Nvidia a very good chance, but I also think that people need to understand that when you're investing in semicons, especially in the chip makers, it is an arms race. Okay, in other words, this year you are faster. A few years later, I'll be even faster. I will have an even shorter nanometer. It's just everybody's just fighting each other. It's always on an arms race, which is why there's some sort of people say there's some sort of cyclicality, and but there's also reports saying that cyclicality may disappear because more and more usage and what have you, right? So I did a discussion with Searching. It's gonna come out maybe in a few months. But yes, we got a lot of content stacked out. So yes, give us some time to release bit by bit. But generally, knowing that it is arms race gives you a little bit more clarity in trying to understand why they in the first place wanted to buy ARM. Yeah, that's my base case. By the way, I want to shout out to our audience that if you have any questions pertaining to our discussion or any kind of questions related to the companies that we have brought up, please drop it in the comment section and we'll pull it out and we can have a good chat about it. Okay, so anything else to add for arms deal?
Arms deal, arms race. Yeah, I see what you did there, lah.
Yeah, I heard that too.
Man, lame lah, but okay. That's all for Nvidia. Yeah.
All right, my turn. So mainly this is more of a product update, but it also kind of leads you into where the trend is going regarding, say, content. So I'm be talking about YouTube as well as for Spotify. So they're actually testing out a cheaper version for each of them. So you might see some trials. Go ahead and click it, say that it's good, because if there's more and more people that say that it's good, then the price for Spotify Premium and the price for YouTube Premium is going to go down, right? So Spotify is experimenting with a 99-cent deal, right, per month, and YouTube is going at about, I think, $6.95 rather than $11.99. Yeah, so all those surveys they do, please just do. Yeah, so this is super awesome. Yeah, okay, but why it actually matters, right? Because this is a price war, right? And for content players like these, they have this platform, but if it's going down to even say like half of what they are originally going to charge, that's going to affect their margins. So as they move down, right, down the chain, then you're going to see other players also reducing the prices, right? It's going to become even more competitive. Yeah. So what do you think? Spotify, YouTube, do you use them
I
any
think
now?
it's quite interesting because I was just looking at a bit of Spotify the other day, and I think the main difference because people always say that Spotify is just Netflix but like music instead of videos
What?
on demand videos. But the thing is, when I look at Spotify, if I'm not wrong, their cost structure is very different. So it's not like they pay a fixed amount and then they can like spread it out among all their user base, right? They have to like pay the record
Licensing,
people,
yes.
yeah, the
Artists,
licensing, then they pay it by a streaming kind. So I think when you reduce your price significantly by so much, and you don't have that kind of cost advantage like people like Netflix where they can actually spread it out, then the margins will take quite a big hit, and then it really is. You really have to see. I guess I would really focus on their independent content on whether they can boost that up. For example, I personally don't use Spotify that much for music. It's a lot for podcasts. And I think that's one area they can develop on. So that's something I will be focusing on, which is the independent content, not those that they get licensed from, those independent artists or podcasts. That would be one area I'll watch it quite. Yeah.
Once again, I want to give a shout out to companies like BuzzFeed, companies like New York Times, companies like Discovery, companies like WWE. All of them are content houses, content powerhouses that you should take a look. Okay, because my take is all these streaming companies, they are all trying to get an edge, right? So they're going to be bidding up all the streaming rights. They're going to be bidding up all these different content brand names, right? So whoever there's a decent brand name, they can continue to stay relevant. They can create very good content, very good eyeballs. They'll be able to bid up their cash flow. They can make a lot of money from there, and it may be a little bit underappreciated, right? Whether is it New York Times or whether is it Discovery or BuzzFeed, whatever, right? Some of these companies, right? So take a look at them. Let me know if you have any interesting observations. We can have a good discussion. But specifically, I like that you've pointed out, Nigel. I like that you've pointed out that Spotify has a slightly different business model compared to Netflix in terms of how they pay content creators. But this is a legacy situation from the music days, right? So in the past, all of them, they do that, right? They get licensing fee and what have you. So that's a legacy, and they are actually investing a lot of money in, like what you said, branded podcast, or whether is it long form instrumental audio and those kind of things that do not have as much of either a premium or they have fixed costs. So that would fundamentally help Spotify's business a little bit better, in my view, right? But like I said, they are not the only ones in the game. There'll be a lot of people bidding up for content. So whether or not can they continue to grow and thrive is interesting. But Spotify's algorithm and Spotify's discovery is amazing. It's a different kind of discovery. Okay, so Spotify's discovery for podcasts is shit compared to YouTube's discovery for knowledge kind of content, right? Because I mean, YouTube is essentially a search engine, right? But if you want to talk about discovery of taste and experience, Spotify is amazing. You can click a few songs. After that, they can kind of know what you like. They will be able to recommend you things that are similar. Their playlist so far, any playlist that you click in, right? If you listen to one or two, if you can listen through 2 or 3 of the first few songs, then you will be able to listen throughout. Right, the kind of matching and discovery is very powerful on Spotify's platform. So I think that's something to recognize. Yeah. As for them reducing their compensation, or as for them reducing their costs, it's a land grab lor. Right. So everybody's trying to do the land grab phase. Right. So similar to every other streaming play. I don't know. I don't have much thoughts about it other than it's a very cutthroat business. It's a hard time. Yes. Oh, by the way, do you guys know that Peloton actually pays the highest for music streams? Peloton, the
interesting.
cycling
cycling
company.
one.
Yes.
Wow.
They actually pay the highest to their creators. Right. So it's interesting, right? I never thought like, wow, the cycling company actually pays the most. Yes, so I think Spotify, Amazon, YouTube, they all pay one of the least. Yeah, Spotify, Amazon, I think is the worst.
Is it to the independent creators or to the record labels?
Independent creators.
I see.
Record label usually have a very different negotiation terms. Yeah, and then all the Tencent licensing rights and all that, right? So it's a same parallel one. The discussion is very different there. But yeah, that's my thoughts on essentially them trying to drive down their costs for customers. But at the same time, the economics don't really work out. From their content side of things, in my view, at this point in time.
Do you think Apple Music, or rather the Apple package, right? You get like Apple Music, and then you get iCloud, the whole package, and Prime, right? Packages like these, right? And the companies that provide them, do you think they stand to benefit from this as compared to, say, the standalone platforms like Spotify?
Amazon Prime and Apple, they are dominating this space because of this kind of package deals, in my view. Okay, but if they continue to do it right, then they run a very high chance of anti-monopoly, legislation. Right, because it's not about whether are they really monopolistic, but monopolistic can be very broadly interpreted, right? If they continue to flex their muscle at such level, then you never know, right? Some of these big breakups may happen, like with earlier days with like Microsoft and everyone else, even before that, right? So it's been a long time since we have broken up a big monopoly. So you never know, you never know what will happen. But yes, I definitely think that these guys have advantage just because of their size, just because of their value offering. From a consumer standpoint, we cannot lie to ourselves. Wow, you pay this one price, you get all these things. Compared to you pay a little bit on Spotify, pay a little bit on Netflix, pay a little bit on something else. The kind of package deal is powerful, especially with Apple. Not so much with Amazon, at least not in this part of the world. I think Amazon in the US is way more dominant, the kind of reach and the kind of experience that they have created. Right? But Apple, in this part of the world is very powerful in terms of the kind of experience that they're creating with the whole walled garden situation, right? But they do have a outsized advantage, a bit too outsized, in my view.
Yeah, but I don't really think it will be a kind of winner takes most kind of dynamics where you just have one winner, right? So, for example, you can have Netflix and Disney Plus because they are producing differentiated content, and so both winners, people can subscribe to both. Just like how if Apple Music and Spotify, they can have their own differentiated podcasts, independent creators. I don't see why both can't be winners at the same time, especially when it takes up such a small wallet share of each consumer, especially if they drop down the price even further, right? So yeah, I think yeah.
Fair. I think that's something that definitely needs to be talked about, in the sense that too many people, when they price into business, right, they always price into the winner take all idea. But the reality is there are certain sensitive technology that will end up in such situations where they really have superior, in terms of the output, in terms of the kind of quality that they are creating. And those things rarely happens on consumer level. Okay, it happens a lot in manufacturing. It happens a lot in precision engineering and all the high tech, complex stuff like pharma and all those kind of things. Those things, they exist, But when it comes to consumer goods or consumer facing businesses, it rarely is a monopoly. Different people will want different things. They have different experience, and like what Nigel pointed out, yeah, it's a multi-platform situation. We will end up with multiple platforms, but that does not mean that the price today you're paying is fair. It also does not mean that you should randomly pick your favorite platform because, Joe Rogan is speaking on Spotify, so I'm going to invest in Spotify compared to YouTube, or I don't want to buy Netflix because, I don't, they lost friends or something like that. Wait, did they lose friends? But yeah. So you get the idea, right? Your consumer experience is one thing. I think especially for a lot of retail investors, we got to be aware, we can enjoy certain content and all that. But objectively, when we look at the business, what is their acquisition cost, what's their churn rate, what is the kind of content cost per consumer? All those things are fundamental metrics that you cannot run away, right? So if you look at all of them, driving price down is really trying to grow the base, right? More users, then the economics maybe makes more sense when they pay lump sum for content, right? But yeah, I agree that it is not a winner takes all, but I also caution the idea of just picking the big, just trying to look into what do you call that, like trying to look into
Fattest
the future.
competitor, just
Yeah,
buy. Yeah,
yeah,
that
yeah,
kind
yeah.
of thing.
Don't just random.
Yeah, definitely.
Cool. Yeah. Anything else for Spotify, YouTube? If not, then let's
99 cents. Yeah, go for it.
yeah. Go for it. Yes. Next. Let's move on to the last pointer for tonight.
All right, so last one I have. So this is a bit this is about Facebook. So specifically on WhatsApp, how they plan to analyze. I mean, on WhatsApp, our messages are encrypted, so they can't really track it much. And now they're saying that they are reportedly researching ways to actually use the messages to do targeted advertising as well. This interesting to me because more recently I've observed more and more businesses starting to use WhatsApp Business in Singapore itself, and so this is that's the route that they always wanted to hit for businesses to use WhatsApp to connect with customers. And now if they are also able to use WhatsApp encrypted message to do targeting, I think the synergy there is great. So yeah, thoughts.
I think this is good for them, especially if Apple, they're wanting to block them on certain kinds of fronts, right? The biggest one is the IDFA. So basically, it's just an identifier for Apple devices. Google also is trying to block everyone else with their cookies. So anything on Chrome. So having some way to bypass that, at least from messages, right, will help them to secure their footing, at least in the advertising space for WhatsApp. Yeah, we'll see whether this kind of technology can apply in other areas. It will be pretty interesting though. Yeah. So basically it's like I can still kind of see your data without you letting me access to your data. It's that kind of thing. Yeah.
Yeah, but how effective is the targeting would be another thing, right? I don't expect it to be as good as the existing Facebook targeting right now.
Right.
Yeah, just logically, yeah. If they cannot even see
Right.
what you're typing, then
No, but if you think about it, the targeting is not a independent thing. It is just more data for the broader algorithm, for the broader ecosystem, right? So they're not solely reliant on one thing. It's like, let's say Telegram say they're gonna use their data to, try to do advertising, or Signal say they want to do. They only have that one platform and it's massively encrypted. It's gonna be very hard for them to do ads, But for WhatsApp, it is just an extension of Facebook, right? So imagine you already have Facebook. Actually, don't need to imagine, you already have Facebook, Instagram, Messenger, and WhatsApp, right? Everybody has that shit. So if you are already on all these platforms, and you allow them to integrate, right? So with your phone integration, your numbers, they pull together, then they know that you are the person already. So it's just an add-on onto their data collection process. It's not, yeah, it's just gonna make them more efficient with targeting, lah, right? Fundamentally. And I mean, Thomas and I, we talked about it in the geek out about how, you know, a lot of things that Facebook is doing seems not very profitable. Yes, because it is new features, new functions. They're not really monetizing it, but it's all collecting more data so that, you know, they can be very efficient as a platform to allow advertisers to throw ads at you. Right. So if you think about it, I mean, as content creators, honestly, we do struggle with like performance marketing. You know, marketers come to us and they throw CPM numbers, you know, cost per impressions, right? And they'll be like, oh, you know, we throw Facebook ad, CPM is 40 cents, 50 cents, you know, YouTube ads maybe 30 cents, you know, whatever. I'm like, how to fight? I cannot fight this kind of CPM. I find it very hard to give you that kind of competition. So just as a personal experience as a content creator, for all of you listening that don't understand, cost per impression essentially is the amount of money the advertiser were to spend to get you onto, you know, their website, or to get you onto their link, to get you to interact with them, right? So there are a lot of softwares that are trying to optimize this thing, but at the base case, right, Facebook and Google has already done massive job, you know, great job in optimizing this thing to essentially commoditize your impression, right? So even as a content creator, I find it very hard to charge a premium, right? A lot of people come to us and like, wow, you're very expensive. I say, yeah, of course, I need to fund, right? Facebook is a lot bigger, right? But yeah, all that being said, as a investor, I'm long Facebook. Okay, I just want to put it there. I'm long Facebook. I like it, of course, as an investor, but from a social user, from a person that is in society, I may not like it as much, right? Because I think at some point it becomes too, you know, it's just too much lah, right? Like go la, enough information already. What else you want? You want to know what color underwear? Where is it? You know, that kind. It's like, okay,
Actually, we have a product for that.
yeah, they have built something for you, right?
Damn.
Yeah. But, yeah. So yeah. Thomas, anything? I know you got a lot of things to say about Facebook.
I think it's pretty good. It's interesting. It's there to stay as a company. So although it's a big company, there is a lot of attention is put onto it. It's also doing as best as it can to try to appease to the regulators. So this is one of them, right? These side projects say like, see, like this project, if I'm able to do it, I'm not invading everyone's privacy anymore. Yeah, and then nothing to say anymore, right? The only thing left is like the anti-monopolistic thing lah. But I guess they have other ways to address it also. So overall, I think yes, good as an investor. Social wise, a bit of a gray area here lah. On one hand, you can fight to say that yes, they're not actually invading anyone's privacy, right? They can still make money off it. On the other hand, it's like yeah, they're just working around whichever regulations they are lah. Yeah, so it really depends where you stand on the fence.
Yeah, but I definitely want to reiterate the idea that a lot of these things that Facebook is doing, or even Google, you know, as two of them especially, a lot of these new features that they're rolling out, a lot of these new things that they are trying, it does not need to be massively successful. Okay, it does not need to be like the next big thing. It does not need to be the best, because it's just an additional thing for them to become better at what they are already very good at. Right, so don't need to be too raved upon any particular features that they are doing. I'm actually more. I will be more excited if Facebook creates more business models. You know, whether is it like WhatsApp business, or you know, more streams of revenue. They have a lot of features already, but the revenue is still the same. Yeah,
The metaverse,
Yes.
Oculus Rift, Oculus Quest. I think it's on its way lah.
Yeah.
Maybe in 10 years.
Yeah, Ready Player
Maybe
One,
in
Ready
10
Player
years.
One. Yeah,
Yeah,
Ready
yeah,
Player
yeah.
One, guys. But yeah, I do hope that as a investor of Facebook, I will want to see more of that lah. Yeah, right. Not so much about new features, not so much about new things. You know, I think those are important to stay relevant. But yeah, business model, man. Aren't you concerned, Nigel? Like Facebook for so many years, right? They only make money from ads.
Actually, I'm not so concerned, because to me, if something works, why not just continue doing it? And the addressable market and everything is still so underpenetrated. I think like out of like few hundred millions of business on Facebook, only like a small proportion are active advertisers. So the market is so huge. In the process, if you can come with new revenue streams, that's even better. Like if they can do something like a WeChat next time, that would be amazing. But in the meantime, they are still a cash cow generating growth of like 15-20%. And then you get the added optionality of all those other factors, AR, VR, metaverse, whatever, Facebook Pay, WhatsApp Pay. That's a bonus. That's actually my core thesis for Facebook. Proven business cash cow, and then you still have all the optionality factors. So your risk to reward is fully at the optimal. And still, I think like when I got my first position like 2-3 years ago, it was so damn cheap. So you still get a valuation plus point. And then to me, that's why the risk to reward is optimal for Facebook.
I think big things
Yeah,
take
yeah,
time. Yeah, the big things take
Yeah, I was
time.
just
So I
gonna
think
say,
Oculus Rift, Oculus Quest, the VR play, it's a very long-term play. Like Facebook, even for Google and for Apple, right? They don't do things based off trends. Like they say, oh, fintech's a trend, let's do fintech. Apple is like from the longest time already, they've wanted their own credit card, they wanted their own wallet payments, and then they initiated when the time was right. So there's always an R&D that's going on. For Facebook being an advertising company, I mean that's what it is, right? So is Google or Alphabet, right? I mean it's got a lot of other spin-offs underneath, right? It's a venture capital company, some might say, but the bulk of their revenue still comes from ads. Yeah, and you don't really see much innovation that's coming out of it other than more investments into their VC funds. Yeah, so big companies, you have to give them some slack. Yeah, so they will continue to grow with their current business model, I think. But as with this kind of optionality, they also take time to see how they can really plug it back into their main ecosystem and then grow from there. Yeah. So yes, 10 years should be the horizon.
yeah, I think there was I think in a few years back, one of their earnings calls, so they list out. I think actually in all of their earnings call, they will always say their 3-year plan, 5-year plan, 10-year plan. They have this outline and the AR VR
Yeah.
thing is always in the 10-year plan. They always talk about it in the 10-year plan, and
Right.
you can tell from the management tone, it's too early. It's very early, still long way. Like the tone is always, we're just investing for the future kind of thing. But if I'm not wrong, their R&D is very heavy in that space. It's actually predominantly the AR VR space. It's just that I mean I believe it's a hard tech to come up with the whole metaverse thing. It's definitely not something that's easy. But to see that they're actually putting the cash to work, and they actually have in mind to work towards that. And more recently, Mark Zuckerberg officially talked about it formally, and I think that's a good direction for Facebook. If it plays out great, if it doesn't, you still get a cash cow that's generating crazy amount of profits. I'm still a happy shareholder at the end of the day. So that's just my general thoughts.
Fair. And I think it's good to note that Zuckerberg is still very, very young. Right? It's not easy to have a founder that started so young, managed to keep changing himself to get the company to where he is and get himself to where he is. And I think recently he has went on longer holidays, which I think is great because it's a sign of maturity. His ability to like let it go, let the team manage, and things are still doing fine, and all that jazz. So to me, because I do this kind of a lot of things, right? But either way, I think this is good, right? Because you keep hustling. Your mind is clocked, right? You need to go out and see things. But I would say that people should not be giving them too much slack also, right? Because if you ask me, the whole WeChat Pay, they lost out. They lost out on the whole WhatsApp payment process. They lost out on the whole messenger payment. They could have done it 5 years ago, but they didn't really do it as much, right? So I would rate them more as a like a bit like a B, not so much A management, right? Because if I actually, to put it bluntly, right, if Dorsey was managing this company or Musk was managing this company, right, you will see them or Bezos was managing this company, you might see Facebook at a whole different realm altogether by now, right? In my view, right. So I think Zuckerberg is, it's good management, okay, but don't need to, I will not give him too much slack, in my view. Why you laugh,
Giving a B rating. Where's the A minus or the A plus? Right? Yeah.
Okay. No interim. But that's my. So I don't think it's a bad company. I think business fundamentals are pretty good. All the little things that they're trying to do is great. But at the core, I think they probably could have done so much better. But even at today's valuation, it's quite good. Okay, so that's just my base take. Anyway, we have a question about TikTok. Okay, I know your favorite topic about TikTok. Okay, so I'm not a TikTok user. Nigel, are you on TikTok?
Yeah,
Okay. So well,
yeah.
that's a different era. Okay, anyway, I'm not on TikTok. Any thoughts on the rise of TikTok? Is it gonna challenge Google? Is it gonna challenge Facebook?
Yeah, so I think I can talk about it a little bit because I use it as a user and as a content creator. So I guess the on the ground kind of thing. I touched a little bit about it in one of my videos, I think like 1 or 2 months ago. I think the most important thing to understand, right, is that when you're using Facebook, Instagram, and when you're using TikTok, you're using it for two different purposes. When you're using TikTok, it's because your mind is dead and you just want to sit there and scroll and entertain yourself. But when you're using Instagram, you're trying to see what your friends are doing. There's that social element that TikTok doesn't have. So to begin with, I would even put them under the same competition for users. Of course, they compete for user attention, user time spent throughout the day, and of course, advertising dollars. But to begin with, the user intent is different. And I do not see TikTok ever coming to the social element for Facebook that Facebook has because the primary content format is short videos. I don't see people taking short videos of themselves, updating on short videos in the sense of Facebook where you can post text, where you can post pictures, things like that. And then the other thing would be, of course, competing for ad dollars. I don't think they even come close. There will be some ad formats that will work better on TikTok. I think I spoke to a friend who was doing like social media stuff. They did try out some ads and everything on TikTok. I think certain formats work well, but for the most part, performance ads wise, like you said, no one can compete with YouTube, Google, and Facebook. That Reggie was mentioning just now about the CPM. So pretty strong. Pretty strong. What Warren Buffett would say a moat lah. Pretty strong moat there. Very hard to overthrow them in that sense. Another thing would be I think recently TikTok released their numbers. The numbers are a bit misleading because they will say that TikTok ByteDance has this number of users, but the number of users is including of Douyin, TikTok, and Toutiao, which you need to split it up and see like in the markets they compete in. Actually, they are still really far behind Facebook. So yeah, just some general thoughts lah. I don't see them a threat to Facebook at all.
Thomas, you wrote
Although I think
extensively about TikTok.
that was some time ago, but recently updated for TikTok, they're actually copying some features from Instagram. So Instagram stories, yeah, there's TikTok stories. But instead of following your friends, I think that's more of following your favorite influencer itself. So yeah, Nigel, you're right. I think that the followers, you're stalking your friends on Instagram, right? But as a TikTok user, you're more of like just a bit brain dead. You're just following whatever's fun. So the format is a bit different, but features wise, I think they're trying to copy each other as much as possible. But there might be some overlap. There might be just some overlap with the features as well as the users they're catering to. So for TikTok users, basically I think it's pretty young generation, right? And they're using it to just sort of like kill time, right? Instagram, anyone can just go onto it and then start a business using Instagram, but not everyone can actually do that on TikTok. It's a lot more involved. Like you have a whole team set up, right, doing the content and then like blowing the fan and that kind of stuff. Is amazing. All those kind of like videos. So yeah, I think it's very very different going forward. Of course, they are competing also because of the ad dollars, so that's why they are in the same space. Definitely a contender because they're taking up eyeballs, right? So if it reaches to the point where TikTok is taking up too much of, or I would say too much, a lot more time, eyeballs, attention from the same set of users that Facebook has, that Google has, or say like Instagram has, right? Then that's cause for trouble. Yeah, they have one of the best. I don't know what metric to call it, but it's just attention grabbing. So you stay on for a lot longer as compared to Snapchat, as compared to Instagram. And it just keeps scrolling. It's the way the mechanism works. And then the machine learning algorithm just keeps recommending the content over and over and over again. Now, Instagram doesn't have that same effect, right? But you keep checking back into Instagram multiple times a day. That's the difference. Yeah. So one is like long stretch. You like just like addicted to it for like 2-3 hours straight. And then like you wake up like, oh my gosh, it's really like 2 p.m. Just now when I started, it's like
Really?
yes. There's this
Wow.
you get sucked into a different world. Whereas Instagram is like intermittently you check here and there. Maybe your friend posts a story, it informs you, right? For push notification, and you see like, what your friends up to. Then maybe you all hang out or something like that. Yeah. So it's very social, that dynamic, which is stays true to Facebook's core. Yeah.
Yeah. Okay. So I think for TikTok, I'm not a user. I tried it. I think they're not looking for me lah. I'm not the kind of user that they're looking for. As a content creator, it's also not a platform that I play in. But interestingly, I think for a lot of people that are looking to invest in, potentially invest in TikTok or any kind of social media company, right? You really gotta fundamentally look at the ad ecosystem lah. Right. So there are two things, right? One is the MAU. You gotta look at the user interaction and all the data as a subset of the user, but you also got to look at the ecosystem of the business, right? Like what Thomas said, right? If it eats into a lot of attention and all that jazz, then yeah, probably one day it will monetize and it can dominate the space, as a three corner fight, probably. Okay, but if you ask me, there are a lot of other players that tried, right, in the space. Whether it's Twitter, whether it's Snapchat, whether it's Pinterest, they are not as crazy, right? They're not as viral as TikTok for sure, but they have loyal following. They have decent MAUs. They have good interaction, but they have a very
coexist,
lousy. Yeah, they can coexist, but they have a very lousy ad ecosystem. They're not monetizing very well. Right, so shout out to Jack Dorsey. Please choose your camp. You either work for Square or for Twitter. Go and quit one company. Okay, stop being a CEO on both sides and let the ladies do the job. Okay. Anyway, shout out to his CFOs. They're amazing. Okay. But yeah, that's the idea, right? If you can get attention, great. But after you can get attention, you gotta monetize, right? As an advertiser, if I cannot monetize, then it makes it a bit hard, lah. Yeah. So that's my take on TikTok as a company. Anyway, it's not listed yet, right?
No, you're not.
Okay.
But
Okay. Yeah, I know they recently Go ahead.
But I think that's a great point you mentioned, which is the how their ability to actually monetize the user attention. Because if you look on Facebook, right, there's a lot of very quality data that users are giving on Facebook. I join groups. When I join groups, my interest is all there, right? If you join like I don't know, like cutting trees group or like planting trees or
you
or whatever,
planting tree group.
No, I'm just giving random examples,
cool.
right? Yeah. Then people Facebook knows that you're interested in that, and then the interaction you have with your friends is definitely way more. The quality of the data that they can actually collect compared to other platforms like TikTok, right? So that's one. But I must say that TikTok's execution team is the team's execution is crazy. Like the rate at which they go about jumping into social commerce, partnering with all the social e-commerce players and everything, right, is way faster than what Facebook was doing. They had like you said, they had years to do it, but they only started doing more recently. And TikTok just came in and just executed. So I must say that the execution is great on their end. But at the core of it, advertising model or other areas of the business, I still think Facebook has a very big advantage.
You see, so you agree with me, right? Facebook is a B management, right? So now A management. Okay, A minus. Okay.
Mark Zuckerberg is an A plus.
Really?
I'm still a big fan of Mark Zuckerberg.
Okay. Big fan of Sheryl Sandberg here, but anyway, we can talk about this offline and another time. Yeah, but by the way, I do think that people should recognize that TikTok being spun out from China essentially is a spin-off from Douyin, right? Douyin's China's social commerce is crazy. Right, so people watch live streams, people watch and buy, and and all the social commerce, right? Looks like a proper studio, like people film talk show like that, all the MediaCorp studio is nothing compared to the kind of Douyin 博主that are selling things, right? So because of the social commerce, I think it is an extension of that kind of behavior, right? And you're seeing it being localized into the different e-commerce players also, right? Whether it's Shopee, Lazada, Taobao, they're all using social commerce also, right? And we can have a good discussion about that another time. So yes, thanks for joining us today, Nigel. It's great having you around. I hope to see you around again. Yeah, for everyone else that enjoyed our discussion, you can give us a follow on our socials. Check out Nigel's channel also, Invest with Nigel on YouTube. Okay, join our Telegram group, sign up for our weekly newsletter at thefinancialcoconut.com. Okay, any more questions, we talk on Telegram. Meanwhile, take care. See ya, guys. Ciao.